All right, welcome, welcome. Little quick sound check here. It's we just back and forth. How many people get sound? One more time. Sound check right now. Yes, you can hear me. This is great. All right, so what we're gonna do is give you what I think is some pretty dynamic information on a product that I know there's a few of you guys in the live trading room that have been seeing this and are wondering and pinching yourselves when is the train ride going to end. We've got some pretty dynamic um, volatility in the market, and that's, as far as traders, we kind of need that. Position traders might have a problem with it, and trying to trade a market and manage risk, it's kind of like if you miss a move, you're probably on, if you use position sizing guidelines and you're too small, you're going to underperform the market. But if you're too big in your position and you get a massive bad presidential tweet or a bad text from China, you're going to wish you had been remained small. So it is kind of a very dynamic market environment. And it's not just reserved for the equity markets, it's also gold, and now the British pound, which had a really big move, was something we were talking about. But besides that, equities, individual stocks, look what we got going on with earnings. Pretty crazy market environment. And I think that depending on your trading style, it's good. And I would have to say, as I just mentioned earlier, short-term trading is dynamic. Longer-term trading might be an issue. So please take a moment to read this risk disclosure, and let's get into our program. Last weekend, I was out at the San Francisco Money Show. Cool city. Like most things, there are issues. Homelessness was pretty crazy out there, but a lot of great people that came to see us at the Money Show. The weather was fantastic, and it's just a beautiful city, man. So just got to tell you that. But we also met, and I hope some of you guys, if you'd raise your hand, who was at the San Francisco Money Show, because I said I was going to do a webinar, a product webinar, more about this Algo 17, and that's what today's webinar is about, the Algo 17. If you're not an algo trader, I still think you're going to get a lot out of today's webinar and education format. But if you were out there, please raise your hand. If not, we'll move on. We are a financial, first and foremost, Person's Planet is a financial research and advisory service company. We do education, we have seminars, we have improved upon trading strategies, we have proprietary indicators. Many of you are familiar with these indicators that are available on many other platforms such as TD Ameritrade's Thinkorswim, as well as TradeStation and Trade Navigator Genesis, which is really a dynamic charting platform. We definitely have trading courses from the very beginner to an advanced high-frequency trader and to fund managers. A lot of people in the financial field have come to me for the way we analyze and set market analysis together. We do have a weekly newsletter backed with 2 live trading rooms, and that, I think, was the conflict of coming into the room today. I may have been not able to be disengaged from the 2 live trading rooms. Remember, we have one that we do with stocks that is about the newsletter with option positions, and the other one is an algo live trading room, which we have strategies that run for the open outcry session. So that's pretty much what we do around here. And our live trading room and weekly newsletter, we have video market reports that helps investors learn and understand what I think is true market trend and condition. And this is, make no mistakes, a really tricky market environment. Look what we did today. If you were an active trader and you saw the market, 10 minutes into the close of the S&Ps, the advanced decline popped into a very positive, like a whole sector of stocks. We went from an advanced decline in the S&P 500, which is just a definition of how many stocks are positive on the day versus negative on the day, right? Advancers versus decliners. We went from a reading of around 275, and within 8 minutes, we were up to 314. So we really threw the market into about what, 75% of the stocks in the S&P 500, 70% of the stocks went positive in the final 5 minutes of the day. And then in the final 3 minutes of the day, that advanced decline number fell about 80 points. And it was pretty dynamic. So big volume, big pump, big dump. What does that mean? To me, I think it's a little bit of market manipulation, and I'm going to share that with you in just a few minutes. Fund managers were driving the market up. I don't know if it was algos to be able to do this. You can do this in a very short period of time, but very hard to manipulate stocks over a period of time. But I think that this is the kind of techniques and tactics we need to be aware of. And really, as I say, it's not important how a market opens, it's how the market closes. It's not important how the market closes even on a daily basis. It's how the market closes over a 2-day period, or more importantly, a weekly period. And I'll get into that in just a second. So we have proprietary research and methodologies. And part of what I was talking about right now is using that breadth of the market as an indicator, more so looking at price-based indicators. So when we get into advanced decline and we get into trade system logics, what's driving this market today was just a fantastic example of how computers took over. I believe firmly, if you were watching, how many people were watching the market today? How many people were watching the market today and saw what I'm describing at the end of the day? It went up and it went down. Now, if you don't think that's computer programming, think again. So we got to look at what's the trigger of a trade. What's the risk factor? And I think putting together any type of strategy, someone's driving a market to do what? Maybe get a bigger share of market or to dump off trades, but something was going on. And these are my 13 bullet points, and there's probably another 7 or 8 I'm leaving out here. But a lot of considerations go into building an algo system. What's a trigger? Trigger means call to action, buy or sell. Risk factor, where's your stop loss? What are you risking on this trade? What is the exit strategy? Are you getting out at fixed percent? Are you getting out at a fixed point? Are you getting out at a dollar amount? Are you getting out on a trailing stop function? What is your exit? Are you getting out at the time of day? Are you getting out if the market moves X percent in 4 bars, 3 bars? Exit strategy. That's what we're talking. How long are you staying in this trade? What's the average length of stay? Do you stay in the trade till hell freezes over, or do you stay in the trade on average? Can we get information that can get that type of data for us? And the answer is yes. What trade session are you in? The overall 24-hour session? Are you trading open outcry? What is open outcry now that everyone allows people to trade pre-market session? You know, earnings come out and stocks are still trading. It's 4 o'clock. At 4:02, they reopen and they go on until 8 o'clock at night. So stocks are still trading, or you're able to trade. Now, I'm not saying they're liquid, but you can still trade markets almost in equities, almost like about 18 hours now. So there's other considerations in putting trades together and filtering out trades. And I want to kind of deliver some information there about, for example, bullet point number 8 here. Ignore a trade if the risk is 5% greater than the average of your loser. If it's 4%, 10%, 20%, what's the average loser mean, and how do you figure out what an average loser is? Well, if your average loser on a day trade is, let's say, $300, if it's 100% of $300, meaning your trade's going to be a $700 risk, don't do that trade. That's what I'm talking about, ignore trade. These are kind of considerations that can be programmed into an algo system. Ignore double signals. Well, sometimes you get a buy and then it kind of fails and then it gives another buy and it gets right back in. So maybe ignore double signals. Maybe ignore alternate trade signals. Ignore sells near support. Ignore buys near resistance. Exit a trade after 5 bars if there's no change in price. Now, I like what I just said. Now, think about what I just said. You get into a trade, if it's a momentum trade, we should see maybe a breakout, higher high, higher low, almost immediately. If you want to go long the market, you want to get in, you want action, and you want to get out. Little as heat as possible. Instant gratification, instant winning trades. But we know that doesn't exist all the time. But number 12 is a very strong bullet point. If I get into a buy signal, and I know my holding period says that I'm generally in this trade 8 to 10 bars. If after 4 bars, we don't see any performance. Maybe we need to exit that trade or reevaluate the position. And then finally, this is a very intriguing and very powerful bullet point. How do you change a stop? And something that we did in what I'm going to share with you in today's presentation on a trailing stop function. How do you change the stop or trail your stop if you're in a profit if the ATR changes by a certain percent? So you got to kind of, ATR is highlighted in yellow there on the slide because you got to know what ATR means, right? So this is where it gets complicated for a new trader. I may have lost you on bullet point number 1 if you're a brand new trader. What do you mean, what's a trigger? And I just thought you get in because you like to get in a trade. No, trading is all about a few things nowadays, and this is the computerized world. So the first thing we've got to probably know is what is average true range, and that's the distance between the or the difference between either today's high and low, or maybe today's high and yesterday's close. Whatever the greater of those two number is, that's the range, the true range. And the average true range is just how many days, like if it's 10 days, you add up all 10 days and divide by 10, and that gives you your average true range. And that's very important to understand when you're dealing with markets and trade systems, because we see fluctuations in those average true ranges over time in most markets. And by the way, I'm gonna point this out, that in the S&P 500 since 2013, and you can back test me on this, you can visualize this, since 2013, now that's 6 years, guys, ladies and gentlemen. Since 2013, 70% of the time, the S&P 500, even though the value of the S&P 500 has changed, the average 10-day ATR is around 26 points in the S&P 500. 70% of the time. This year, we went through a period where we were sub 30 for about 2-3 months, from February until May, right? And then we expanded, and just last week, we got into an ATR because of the way the market was selling off with that 800 Dow point day last Wednesday, I think it was, right? And the ATR and the S&Ps went up to 76 points. 76 points, 10-day average. That means that's a lot of movement every day. So with that stated, we need to have some kind of a program, and that's what we created. And many of you I see are already clients, and I see Randy's here. I see JC, Mike. I don't know which Mike it is because it doesn't tell me, but we have the Algo 17 program, which allows traders to customize and tailor entries and scale outs to specific needs per individual's requirements. What do I mean by that? Well, if someone's trading the S&P 500, the spiders, or someone's day trading the market, or someone's trading other program products like volatility, you may want to trade overnight. You may want to trade a swing trade program. You may want to be a position trader. You may want to trade 5-minute, 1-minute. You may want whatever your needs are or your horizon of trading techniques are. This allows you to custom tailor your own trading program and define good buy and sell signals. So we have a few trading solutions here that allow us to have rapid entry response to buy and sell signals. You have a choice for hard exits and scale outs. We have manual override for extreme price moves, which we've got right now going on in the market. One of the things that we do is we do absolutely have ongoing support to help our clients with monthly meetings, as well as one-on-one consultations with people on this program. And I just want to kind of share with you a few things. This is for those that are not day traders, just bear with me a minute, because this is pretty critical information, whether you're a day trader or whether you're a position trader, because it's the same concept. It's just two different time frames. Not every trade is going to be a winner, and I wanted to make sure that we highlight that, because sometimes we get into we're in the market and we do what's called, we probe the market. The market has a breakout, and you sit there and say, hey, this market's getting ready to go, and you have a probe and you have a breakout. But many times discretionary traders, and I've been guilty of this in my early years, I'd get in and I'd look the market, look bullish, I'd get long, it wouldn't work, I'd stop out. I'd get back on that horse. I'd buy it again. I'd get stop out. I'd say, hey, enough of this. I'm done for the day. 2 times, slap me in the face. That's it. I'm sure if I asked everyone in the room, how many of you guys have gone through that kind of scenario where you've gotten in, you got nicked, you gotten in, you got nicked, and then you finally, with another setup, you go, no, I'm done. I'm not taking that one. And that's the one that really makes up for the prior 2 losers and has a dynamic day for you. And that's pretty much what I think. This is a true representation of the market. By the way, this is yesterday's trade analysis. And if I'm not mistaken, excuse me, this is today's trade analysis when I first took this screenshot. This is today, by the way. Lisa, all day, happens to you every day. This is today's screenshot. So I want you to understand, if you have something that has a viable risk on the first trade, a viable risk on the second trade, but the third trade has, and let's look at that third trade. You'll notice that it's only doing the same types of trade, size trades, 2 lots, 2 lots, 2 lots. It doesn't fluctuate within 2 lots and hey, that lost money. Now I'm going to do a 4 lot. And that didn't work. Let me do a 20 lot. Well, you can't trade like that. You need to have consistency. So what we have here is a 2 lot mechanism trade program, which gets into trades. It has a risk factor, and then it has a profit target, which is what that blue line is. And then it has another unique function where it trails a stop. Now, can everyone see that this particular program has several different lines? And let's talk about what these lines are. The first red line up here is the initial risk factor. Here's your entry with the arrows. Here's your risk factor. The function has a profit target, which is down here at this blue line. So if the prices get near that blue line, it jams and trails the stop from loss to slightly a little bit of profit, which is what that orange line is. That's a hard stop. Once it crosses into profitability, it then will move the stop down. So I wanted you to see what the red line stands for, what the orange line stands for, and now what that blue line stands for. And you'll notice it's labeled profit out of 1. So it went short, it got out of 1, now it's trailing the stop on the balance. What type of trailing stop? And this, for those that do have this program already, this was the sophistication that we took Algo 17. Why is it called Algo 17? This is the 17th version. It's actually the 20th version, but it's the 17th version. And we have called it now, it's the second version of the 17th version, if that makes sense. So it also sounds pretty cool. Algo 17 V2. So that's really where the name came from. We just got tired of, I didn't want to do Algo 18, Algo 19, Algo 20. We keep coming up with little updates. And by the way, those who get this program have always gotten what we call free updates and upgrades. But now we've taken this to a sophisticated level, which I really don't think there's much more to add. And I'll go through this in a minute, because it alternates and takes and decides what the best profitability trailing stop function is. And we're going to talk about that in just a minute. We have 3 different trailing stop functions. My last conditional change, which we'll get to in a second. It has a dynamic trailing stop, which is a variation between a hybrid, let's call it, between last conditional change concept and ATR. And that's what the gray line represents. And then it has this other kind of concept called the compression exits. And the compression exit is a combination of tightening up the stop as time goes by. And as time goes by, it tightens up that stop. And if it didn't get stopped out here, then it would have kept going down and trailed the stop. Now, the indicator at the very bottom is a proprietary for my clients. This is a volume indicator. This is sophisticated of a momentum indicator of volume. So it takes the momentum change of volume, but not in terms of actual volume readings, but in terms of percent change of the volume. So it's an ultra sophisticated way of filtering out volume analysis. And what's interesting here, and we'll get to the next slide in a second, but notice as the price is starting to plunge, the histogram components are moving higher, meaning they're making higher lows. Does everyone see that? That's suggesting even though price has made a newer low, it's making a newer low on less momentum of volume. That's an early warning sign that the downside pressure is abating and there's actual some probably buying going on. And so when you start to see, and you're short the market and you have an algo strategy on that's short, and you start to see that maybe momentum, you definitely want something to do what? Protect your profits and trail a stop. This is absolutely a perfect trade, folks. This is about as good as it gets from any standpoint, from any professional trading strategist. This is as good as it gets. The Algo 17 program, the stop management logic tactics, I think is very critical to go over. This book that was written 15 years ago, that's right. It was written 15 years ago. I think it was finally published in 2006. So it took all this time to write this book. And in that book, I introduced this concept of called last conditional change, LCC. Now, on a side note and a small shameful PR piece, I signed a contract back in 2015 to come out with the second edition of that book. I've had a few extensions on my deadlines in the last 4 years, and I am happy to tell you I am a few more chapters away from finishing this ball and chain that's been around my neck. But what's interesting about this second edition is that we've introduced concepts that we've used and integrated in the Algo 17 program, and it is going to be a dynamic book. And you know what's interesting about this book is back when we wrote it, I said this book will stand the test of time. And not only has it stood the test of time, but it's actually helped to develop what you're about to see, or strategies that were built in to the last trade model that you saw in that last slide. Now, I also wanted to make mention about the dynamic stop, which is, I said, a hybrid between ATR and LCC. It's a combination. And then we put in this compression function, which mixes and introduces a tightening of trailing stops over time when an optimized average true range setting is triggered. And I think if you have better entry and you have better exit logics, you're going to have critical, which is absolutely critical for improved performance over time. So, by the way, this is a 15-minute model, incidentally. And look at the date that it shows up here, August 22nd. Look at the time. This is a model that goes back since May 6th. Why doesn't it go back 20 years? Why doesn't it go back 10 years or even 1 year? This is a 15-minute system that generates a boatload of trades. Now, we have a system that takes longs, takes shorts in a dynamic market environment. And we have a commodity such as the S&Ps that roll over every quarter. So every quarter when we go through a rollover period, we have to maintain a strategy to adjust for possibly the pricing difference between the current month and the futures month. We call that the contango or premium or discount between spot and futures. So we have to adjust for that. And we also have to adjust for something that's very important. What is the market environment trading? What kind of an ATR? So if we have a market in the S&P 500 that's trading 76 points a day, and you got a system that's taking 3 ticks out of the market, you know, that's an expensive 3 ticks, because what is it coming at the expense of risk, right? If you notice today's 5-minute bar at the very end of the day, it had a 6.6 points in a 5-minute basis. The last, right before the cash close at 355 was a 6-point range. And the last 5-minute bar before the cash market closed had a 10-point range. That's $500 in 5 minutes on a one lot. notional value. Do you know, by the way, this is something that's very interesting, guys, ladies and gentlemen, because I just stated earlier that 70% of the time from 2013 to 2019, the market stays in a 26-point trading range. And yet one 5-minute bar did what? 10 points. I mean, gosh, it did like 40% of the range of what would be a normal trading day in 5 little minutes. This is market manipulation extraordinaire. Anyway, I wanted to point out to you, whether it's a 5-minute or a 15-minute, it's the same kind of concept of how we are addressing and building a strategy, and we're going to get into those functions right now. Again, here's your entry. The red line's your risk. Orange, as the price starts to move into the trend profitability, it jumps the profit or the stop loss from a loss to a profit target, and then it exits half the position. And look what happened here. It maxed barred out. Now that's kind of an interesting exit, because in the very first slide with my 13 points, I said, what is your exit strategy? How long are you holding it? Are you trailing a stop? What are you doing to get out of this trade? Interestingly enough, this max barred out because the average holding period, and I'll share this with you, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 10th bar out the next open. So average on a 15-minute bar of a trend is between 8 to 10 bars. Ironic that, by the way, that was described in that book 15 years ago, and we're still optimizing that out to this day. This is an equity curve performance on crude oil, which I don't know if a lot of you day traders in the futures market, but even if you're a cash equity trader, crude oil, it has a lot to do with what we trade in the oil and gas exploration sector, XOP, oil producing stocks like Chevron, Conoco, etc., etc. But having a dynamic system like this is the same concept. If you notice the date, it's today. I didn't want to cherry pick and just show you today's, but I thought it was important to show that this equity curve it's based off a 5-minute model. This goes back since, again, same time period, June through August. And if you are a trader, you know that crude oil has gone through insane volatility. But what's unique about this, if you look at this, almost a $30,000 portfolio, or at least this is what the equity curve is showing on 2 contracts of day trading in the market. This is extraordinary. And by the way, at the end of today, it made an all-time new equity high on this trading model. So what does it do? Again, it enters a trade, puts your stop, so you know that if you build a system, you know what's behind that system, and you know you're not going to get clipped. But maybe sometimes the market knows more than you. And like for me and some of our community members, we always joke and say, you know, I have an opinion on the market. It generally is right longer term, but for this second, I'm always wrong. So, you know, sometimes the market will do what we think, but it does it on the market's time. I think the market's going to go up, but it'll go down first and then go up. And so you can't get picky and choosy with signals. Sometimes you can add a function of filtering mechanism. Like, for example, if you see this as an indicator, which we're not going to really talk about tonight, but it's the TSI indicator. It highlights when bars are blue, it signifies that 2 time periods are in sync with buy mode. And what buy mode would that be? The PPS indicator, the momentum indicator. That's the one that paints arrows on your charts. So in this case, I will let you know, this has a setting of a 5-minute with a 60-minute. So when the 60 minutes in a buy mode and the 5 minutes in a buy mode, boom, it generates blue bars. When the 5-minute generates a sell signal and the 60 minutes in a buy still, you'll change the bars to white and you get a little momentum reversal. What's the filtering mechanism? Well, down below is this volume indicator. If the market rallies and there's no volume behind the rally and you get a little divergence pattern in the volume, that's a good sign that the short might produce some profits. Now, what's crazy is this had a short, little small outlook of profitability. After all, it gets short around 56.20 and the profit target is around 55.80. So, I mean, not the greatest trade. It's a 40 cent in crude oil. It's a 40 cent profit target. But what has happened is it gets out with half the profit. And what does it do? At the time that I was building this, it was still in the trade on the other half. So we will go through and show you what happened in just a few minutes. But I want to go back to the first slide that we shared with you on the E-mini S&Ps, where it probes the first trade, loses, probes the second trade, loses, probes the third trade, huge winner. What are the settings that we have? Well, it's ironic, and so all of you guys that have this program, I'm going to say this again. I know it's reiterating, and I want to reaffirm to you, the last conditional change works very well. What is the last conditional change? Well, let's reveal this for you. The bars on the ES are using also the TSI indicator, which suggests that the short term, if it's in sync with the higher time frame, the bars are red. If the short term and the higher time frame turn blue, then we're back into a buy mode. Ironically, if you notice, we never turned into blue bars. It was all red for the most part. Now, what do these green bars suggest? Those green bars are the higher time frame last conditional change. So the 60-minute, which is hidden behind the scenes, you can't see it. This green line suggests that's the last conditional change support of the high time frame. These short little fuchsia colors are the 5-minute support bars of last conditional change. So with the last conditional change is supporting and the last conditional change and the market's in an uptrend, that's positive. So if the market is positive, you would take a buy and then it doesn't work. And you'd still take a buy and it doesn't work. But what's interesting is when we start to reflect and look here, it generates a sell and we start to roll over from those last conditional change. We broke down a sell signal of support. The fuchsia line, the market closed below the fuchsia line, it stayed below the fuchsia line, and it generated a sell signal and went short. Now, I don't know if you and I, if we were studying this, by the time we decided, hey, I see that, and I go to reach for my mouse, that trade already went down. I mean, we could chase it. But the key is, for this, friends, is that the market generated the right trade at the right time, and then it managed the trade using the combination of the dynamic exit and the compression exit. And the compression exit does not kick in until 3 average true range bars are in effect. What does that mean? Well, if the ATR of each of these 5-minute bars is 4 points, if the 3 times ATR would be 12 points. So at 12 points, then the ATR is going to kick in and override the dynamic exit to help give more profitability. It sounds complex. It's easy. It's pretty simple, but yet it is sophisticated. What's more important about what the Algo optimizer does for us, friends, is it does a slew of things. It helps us to determine the time of day we can trade. It helps us to determine this particular slide, the right position size calculation method. If you're trading equities, we have method number 1, which says I have $100,000 and I have a buy signal. Get me into as many shares as possible as 100 grand will allow me to do. And that's method number 1. Method number 2 says, hey, I only want to risk $2,000 on this trade. I got $1 million in my account, but I only want to risk $2,000 on this trade. You input 2,000 and it'll put you as in many shares or commodity positions that the risk of the trade is that the amount of risk of the overall trade you want to do. I hope that made sense. Again, the risk of the trade might be $300. And if you have $2,000 max risk, it'll put you in as many positions of that $300 that $2,000 will allow you. And then finally, method number 3, fixed position size. And for commodity trading, that's what we have here. We have the fixed position size set at 2 lots because for most retail traders, that is the standard kind of contract size for the account that you're trading. And I want to make sure that I emphasize this. Commodities are highly leveraged. And I think a lot of retail traders over leverage their leverage. And you can control leverage by increasing the amount of money that you have in your account. It's hard to decrease. You can increase your leverage by trading on margin. And that's what you're doing, right? With commodities, it's a margined product. So people might get an intraday margin relief and trade 10 lots with a $20,000 account. And that is excessively abusive in the system and put you at a serious disadvantage. My concept and my teachings has always been for trading in the market, use 100% of your margin per contract. And that way, if you lose 5, 10, 15% of your overall account on one single trade, it's not devastating. But if you use these intraday trade margins, it's ludicrous. Anyway, that's another lesson for another day. And that's why I used a fixed position size of 2 contracts. So when you look at the performance, like you saw that slide with being up $30,000 in the crude oil, that was on 2 simple contracts since just June. That's the difference. Now, this is an exact screenshot of today in our live trading room. In fact, it's the crude oil trade, as you can see in the background over here. That was the 2 lot. It got out, and that was the position. That was at the time the E-mini S&P 15-minute that went short. Over here in our live trading room, people see this. They see the signals that are generated. They can see the red lines, the blue lines. They can also look over here at the strategy position tab, which fires off and tells you what the commodity is, what the interval of the commodity was. Is it the 5-minute model, the 15-minute model? What is the position? Well, we always do 2 lots, so if it's short 1, it means it's already covered half the position. Where was the strategy price? Short from 29.32 and a half. What's the current price? 29.18 and a quarter. What's the strategy P&L on that? $712.50. What time did that strategy get into the trade? 9:45 in the morning. What type of sell signal was it? PPS. And what's the workspace, so that you know that you're looking at exactly what's in front of you. It's not from another workspace on another, desktop. It's right there in front of you. This one, trade room, our trade room, the Algo. If you look here, the Algo 17 version 2 Extreme is set up on its position size of position calc method number 3, which position 1 is 100,000, position 2 would be $1,000 risk, and position size number 2, set at 2 lots. So third setting, 2 lots. Now, how do you execute these trades? Do you do it automatically? Do you trust every signal? Do you want to take a second look? Because TradeStation allows you to have an alert to say, hey, this signal just generated a system that you created. It allows you to either auto-execute, use it as a research tool, and as well allows you to choose whether you want these trades to fire off. If you hit yes, it'll fire off all your trades. So you can look at this position and say, I like it, go for it, and it'll fire off and then manage the trade for you. It'll trail the stop. It'll do everything that you want it to do. Now, I mentioned a few minutes ago about setting time frames, and I just want to cover this a little bit. If you wanted to trade different time frames, you could trade different time periods from 7:30 in the morning to 2 in the afternoon, and you can choose your time frames. This was the earlier version, by the way, which we've changed. This was the original number 3. I just didn't change the slide because it's the same function. Now, this is kind of an interesting scenario because I'm glad we did this just in case. I wanted to make sure in case there was an internet goblin that showed up and we were showing you this live. But this is the screenshot from today in the crude oil. The first trade, by the way, or excuse me, this is yesterday. I apologize. The first trade exits out of its position half, trails the stop on the balance. But look at the exit. What does it say? It max barred out. Wow, isn't that something? And look at the way the market the volume started to lighten up there. Volume as the market started to go down, the price made newer lows. There was no volume on that low. It had what we would call a volume convergence. It covered max bars. And I'm wondering, and you could probably see this for yourself, the sophistication and what I would call perfectness of this trade. You cannot tell me that other type of trading companies have something similar to this, because the market got out of the position, half the position, it popped, the trailing stop kicked in, and look, it stayed with the position until it max barred. And when it max barred out, what a coincidence. What a coincidence, right? It had one of the biggest recovery rallies of the day, but it didn't go long. What did it do? Went reverse short, because the criterias weren't met to take a long. And it jumped right back in on the short side of the trade, got out with a profit. Now look at this exit, gang. End of day. So the best profitability if you're a day trader is to what? Wait until the cash market close, wait until the stock market closes, or wait till Globex closes. And we have optimized this out to find out that it's really until the Globex market closes. You can use this program as much as you want or as least as you want. This is you can build long only, you can build short only, and this is a short only model. It's in the VXX, which is a volatility exchange traded note. And this is a short only model. Now, I circle it because these are obviously trade signals that have gone with a dominant downtrend of this product. Here was a short that occurred in July, and it quickly got out as we saw that incredible volatility. It went short, got stopped out, went short, got stopped out, it went short, and this product is still short. So this is a current position in our VXX model. You can also use long and shorts, and this is a model that we have up in our live trading room on the spiders, which is interesting because you'll notice that it bounces between 342 shares, 331, 342. So when the price is around here, this 290 area, you could see that this has got a position sizing model number 1 on. So this takes longs, this takes shorts. This is both long and short swing trading model. And if it's a blue line connecting the dot, like over here, long, it gets out, it's a winner. If it's a red line, it's a loser. So we really haven't had in the whole month or this summer, we just haven't had a very strong trending market condition. In fact, we've had a very nervous a gapping environment, which I might say you have the flexibility of understanding what you're building and trading. So I just wanted to make sure that you know that with the Algo 17 version 2, you can create your own product, have it on your charts, have your P&L listed. You can also have it on your trade strategy manager's portfolio tab. And so therefore you can look at exactly what's going on. Now this is actually today, and I was trying to finish up for this PowerPoint presentation for you guys, because today we had a great little exit, and you can see the compression exit, and then right after 12 noon, this indicator fired off a long position. It gets long 2 contracts. If you were in the live trading room, you saw this because I was bringing this up and sharing my post and my comments, and it went long at 29.25. So 29.19.25, excuse me. So you can see where it's at. Now here's a BP. You can see the British pound went long 2 contracts up here. It was down 25 bucks. The SPY and the SPXL, which is a 3-time leveraged ETF. Interesting. One's a daily model that's long. One's a 60-minute that went short. So a little mixture of the 2 different time frames. What happened? Ironic. SPXL stays long. Spider gets stopped out, by the way. British pound still long and making now from a loss to a small little profit. Gold gets long in the process, but notice that little long trade in the E-mini S&Ps. It rode a nice little 11-point move to the upside. Notice how it does not scale out of the trade. Why? The compression stop kicked in. It knocked out both trades. So it took a profit. This is pretty advanced. I don't know how many people can appreciate this, but this is insane. Now, Trader Tools asking, what about stocks? So, to trade in individual stocks, you'd have to have a stock that is constantly moving. That's a great question, Trader Tool. So you'd need a stock that has constant volatility, or you want to trade an exchange traded fund like the Spider or the volatility index of that nature, right? So if you sometimes get into an algo trade, or if you're trading stocks from a day trade perspective to build a trade strategy, you want something that has constant volatility, constant daily movement, right? So you don't want to get into a stock that, I got an algo situation here where I get into the stock and the stock doesn't move. So you need a stock, something like a Tesla, something like, now Apple's got a pretty decent ATR going, right? So that's a good question, and I appreciate that question. So the moral of the story is, I was trying to finish, and then every time I turned around, we were still generating trades today. It was an insane day, by the way. So as trade signals generate, trades will continue. By the way, it got out of that trade in the ES and went short the market and reversed. This is kind of crazy volatility. Ironically, the 15-minute did not join that little trade party, but crude oil did. And crude oil bounces right into a short position. And the British pound popped finally, making from what, a loser of a couple bucks to a break even of 12.50 to finally the British pound had probably one of the most biggest positive day. It was up over 1% today. It was pretty cool. And even gold got into the picture. If you notice the last slide, gold had generated a little trade over here. It went long 2 contracts right there in gold, and it finally popped out of its long position. Blue line signifies a winning trade. Anyway, I thought it was neat because we finally today, not finally, but we hit another new equity high in crude oil in the and tapped over $30,000 equity curve in the crude oil 5-minute model that we use in our live trading room. So ironically, the irony is that right before I took the screenshot, it was really near its blue line, its profitability. And again, it got out of the trade and we moved forward. So I've shared with you what the capabilities are of the Algo 17 features and what it does, and whether it's for Spider, whether it's for ETFs, ETNs, or futures. It's a dynamic program that has just incredible substantial financial benefits. It allows one to optimize multiple trading sessions. It allows you to change your position sizing. It allows you to optimize your max profit and loss targets. You can optimize which trailing stop function you would like, which is more profitability. And the point that I don't think I came across was that for short-term trading, by the way, as dynamic as my last conditional change is, what I've found is that the hybrid dynamic stop is better for short-term day trading, and the last conditional change is better for higher time frame swing and position trading. It's pretty interesting. That is something that came about as we developed this. The optimization reports is what helped reveal that. So this is, as we evolve in these markets, we need to have something that gives us an edge in the market against computerization. And as all these trades that I shared with you today in the live trading room, many of you saw that if you examine the footprints that the market moved, it goes down, and then as soon as our system covers, it's like, that's the end of the move, right? So why is my system piggybacking off of what the market's doing? And I think we've tapped into the coding of the structure of what other major market makers are doing and using. And that's giving us, I would have to say, a tremendous edge in the market. So the key is, I think the takeaway is that any trader should know that not all trades are going to be a winner. And the other key takeaway is sometimes you got to still remain in the fight. And you got to be in there. If you get stopped out in the market, yes, there's up to a point where you got to say enough's enough. But I think that that's the key that you should learn that you're not alone. If you think you've ever been in the market and you've had a couple bad trades in a row, and then all of a sudden you say, no, I'm not taking that next one. And that's the one that really, really turns around. I think today's, at the very least, today's webinar shares with you from a professional standpoint, a just dynamic trading system strategy. People would love to have this, let alone try to piggyback this. But you see that it probes the market in like the S&Ps today. And then finally, what does it do? It does what it's supposed to do. It doesn't get out with a 2-tick profit. It holds the position, it trades the position, and it manages the position as it's supposed to be done. And that might be hard for a lot of individual retail traders. A lot of times we try to guess the signal. Hey, the market can't go any higher, I'm going to get short. Market can't go any lower, I'm going to buy. My point is, and something I say all the time in the live trading room, hey guys, if you have that itch, that feeling, because you are a human being, and you think you just can't live with yourself unless you go sell short the market because you think it can't go any higher, then do me a favor, do yourself a favor. If the system is long a contract and you want to go short, wait till the system gets out of its long before you maybe go short. Think of it in that terms, right? How much of an edge is this going to give you the power to give you in the marketplace? Now, this does not come, it's not inexpensive. I'm not going to lie to you, but it's definitely not what other trade programs and educational costs from other retail programs are. And I don't think anyone can come close to this actually. But if you compare that and the cost of hiring a programmer to develop your own strategies, the benefits of ownership of this program is just absolutely enormous. So let's get into it. We've never made this available on the trading app store. It's always available through Person's Planet. So we want to talk to you. We want to know what you need this for and what your goals are. A lifetime purchase price is $39.97. So let's say $4,000. That's what the price is for this program, $4,000. And I think that anyone that's a serious trader, if you think of the education, the backup, the support, and the ability to adapt your trading system with the dynamic shifts in the marketplace, what this offers is insanely unbelievable. I'm extremely proud of this. I think this is probably the best work that we've put together out of personsplanet.com. This is the program that originally was created, that even a hedge fund bought out from us that uses this. There's other programs and other sites that people use this program for to generate trade signals. So we have some professional traders that are using this. We use it in the room, and we have a lot of few people that have actually purchased this, and I really hope they get the most out of what this thing's generating. So with that stated, I wanted to go through what are we doing at Person's Planet? How is the Algo optimizer put together? First and foremost, it allows you to change, optimize, and keyword maintain, not curve fit. That's a different word. Maintain your strategy and the markets, because the markets do go throughout history periods of changes in volatility. And that's where people can't adjust, because if you have a system and a strategy that you build that says, I don't want to risk any more than $350 on a trade. And if you have a trade setup that might be like today, where the 5-minute bar is 10 handles, which is $500, guess what? It's not going to get you into a trade. So therefore, you're going to be maybe missing some trades, but you can highly filter out and keep yourself on the right side of the program, so to speak. So I wanted to say to thank you very much, everyone, that this is, and I think one of our greatest piece of works, especially when it comes to trading. And you know, we put not just our money where our mouth is, but we put this out in a live trading room community every single day, rain or shine. And by the way, we're in South Florida, so there's been a lot of rain. And unfortunately, we have to deal with electrical storms. We have to deal with power outages, and it's almost like living in I don't want to say a third world country, but here in South Florida, when we get these real big storms, we don't get a lot of sympathy from the New Yorkers until they get a storm, and then they get a snow, and then they got outages, and then, oh, poor New York, right? Down here in Florida, we don't really care about you guys. We get weather events, these big things called a hurricane, right? Maybe people care a little bit because a lot of New Yorkers got their second homes down here. President Trump's got White House South down here. Maybe those things are under consideration. But most importantly, when you're an algo trader and you're using computer generated, and if you're not an algo trader, you should be an algo trader, and you're going to have to be an algo trader, because look at what happened in the market even today. With the way the market gets manipulated with the advanced decline, it is absolutely crazy in the S&P 500. And incidentally, in the live trading room, just to give you a little lesson, what am I referencing on the advanced decline? Well, notice at what it is here. You'll see at 2:30 in the afternoon, 2:30 in the afternoon, I made a post in the trading room. Hey, gang, I'm not impressed with the advanced decline. It was neutral. 251 stocks were advancers. So if you follow this, the logic of how I teach people and put things together, we have a 5-minute E-mini S&P program right here. We have a 5-minute spider, because S&Ps trade off the cash market. The cash market is based off the underlying stocks in the market. And we have our volume indicator to say, hey, maybe there's no volume in the futures, but maybe there's more volume in the cash market. So we might get a false sell signal in the S&P futures and a valid buy signal in the spiders. Why would that be? Well, because maybe there's stops, maybe there's market maker manipulation in the futures, and it doesn't exist in the cash market for that moment. So what we want to do is we want to compare and look at what is the strength of the futures, what is the strength of the cash market. So comparing signal to signal. Now, these arrows on the spider, that's the PPS indicator. Now, you would find that on Thinkorswim, et cetera, et cetera. So we've developed these signals to develop a strategy. And there's a lot more to how we develop those strategies and filtering. Like, by the way, don't take a PPS buy signal unless it closes greater than X moving average. What moving average, John? Moving average of the close? No. We built in a strategy that you can optimize out to find out if it's a moving average of a high, moving average of a close, or the moving average of the low. Wow, that is sophisticated. So it helps filter out and qualifies the buy signals. But here in this example, ladies and gentlemen, if you'll notice, the way we logically put this together is we have the algo strategies on the ES, the algo strategy on the spider cash ETF, the algo strategy on a daily leveraged ETF SPXL, volatility VXX, both on a 60-minute model and 120-minute. So these little, I would have to say, 7 little windows here, these 7 windows that I'm circling, all have to do around trading stocks. And if you can manage to understand this and learn this, you've given yourself a hell of an edge. Now, if the stock market is supposed to be bullish and it's towards the end of the day, I don't want the advancers being neutral. If there's 500 stocks in the market, 251 are advancing, that's the orange, 242 are declining. I'm looking at the S&P 500 because that's what I'm trading. I'm not looking at the tick. The tick has to do with the NYSE. I'm not looking at the ARMS index, Richard Arms. That has to do with the breadth in the market in the NYSE. I want the breakdown of what the S&P 500 is doing. And what's ironic is at approximately 350, the advanced decline went from 250 to approximately 320. Now, 320 is a more positive number. And had we closed in the final seconds above 320, that would have been a more bullish bias for tomorrow. But what happened? It pumped it up, and then they just dropped it in less than 3 minutes. And the advanced decline went from around 320 to around 235. That's a lot of stocks that institutions were able to puke out in the final couple minutes. So it just proves a point. It's not important how a market opens. It's how a market closes. And that's what we want to learn and teach you guys, how to get the most out of a program like this. I hope you enjoyed today's session. More importantly, I hope you enjoyed what we do around here and the kind of tools that we use to beat the market and the type of sophistication that's available for you guys if you want it. If you want more information on the Algo version 2, 17 Extreme, contact us at our office by phone, 561-779-7906. Come visit our website at personsplanet.com. You can also review this. It's not on the trading app store. Other products are our Person's Daily Pivots if you're a TradeStation user. If you use our Person's Advanced Trading System, the Trend Signal Identifier, and that's that tool that I told you and shared with you that generates the colored candles if two different time periods are in sync. Now, we'll do another webinar and tell you more about that, but you can also find information on our website. That is an insanely important tool because it allows the user to choose the two time frames. So instead of me just throwing out a 5 and a 15-minute indicator or a daily, weekly, you can change your low time frame and your anchor time frame. So if you wanted to use 5-minute, 15, 1 minute, 15-minute for scalping purposes, you can create that. If you're a professional trader and you're more of a position trader, you can use daily, weekly combinations or 60-minute weekly for swing trading. That's all we have today. I hope you found value out of this. Thank you very much, everybody. And I think at least sharing with you not just what the market did today, what it did across multiple markets today, as well as it was such a wonderful feeling to build this, to have this, to see it work, to have it work for me personally, and to see a new equity high in our model in crude oil. Pinch me, baby. I don't know when this train ride's going to end, but it's fantastic. Thank you all very much. And by the way, if you choose to be a client of mine, I'm telling you right now, you're in great hands, the best hands, end of story. And I take all of my clients' successes. I look for you guys to do the best because a lot of you guys that come to me end up becoming my friends. So thank you all very much for joining us tonight. Thank you for working through this presentation, goblins that started. I look forward to seeing you in the future. Thanks again.